Just in, silver price soars to $69 for the first time in history. Silver is now hitting daily record highs, up 140% in 2025 alone. Breaking, top PM dealer JM Bullion sold out of all kilo silver bars. Let's get into it. Silver just touched the $69 level, gaining nearly 3% in a single session. This move is drawing attention because it comes during low liquidity trading hours, where volatility tends to stand out more clearly. While short-term price action can fluctuate, many analysts are watching silver closely due to ongoing supply and demand dynamics and increasing industrial usage. As always, prices can move both ways, so this isn't financial advice, just a snapshot of what the market is showing right now.
Bar chart writes, just in, silver soars to $69 for the first time in history. Dear God. Then, the Kobayashi letter adds, absolutely incredible. Silver is now hitting daily record highs, up 140% in 2025 alone. Technicals don't matter anymore, and we've seen 8 straight green months. When do people finally start paying attention? This commentary highlights a shift in market psychology. When participants begin questioning the relevance of traditional technical signals, it often indicates that broader forces, such as positioning, liquidity, or macro pressures, may be influencing price behavior more than short-term indicators. Whether that interpretation holds or not, the sentiment suggests silver is no longer being viewed as a quiet or secondary asset by many observers. Dario notes, silver started the trading day about $0.24 in contango. After few hours, we are down to $0.03 and high chance it flips in backwardation soon. Demand for physical silver is driving the price. Only thing the paper market can do is either follow or break. This observation focuses on futures structure rather than headline price. Compression from contango toward backwardation is often watched closely because it can reflect tightening availability or shifting demand dynamics. Importantly, this is not a price forecast. It's a description of how different layers of the market are interacting, which can sometimes precede increased volatility. Hedgeye states, breaking, an ounce of silver is now worth more than a barrel of oil. This has only happened once before. Ratio comparisons like this tend to resonate because they frame value across asset classes. While such moments are historically rare, they don't inherently signal what comes next. Instead, they highlight how relative pricing relationships have shifted, often as a result of macroeconomic forces rather than isolated market events. Gold Silver HQ observes, this has never happened before. Silver is about to print its 8th green monthly candle in a row, monetary history in the making. Extended monthly trends are uncommon in most assets, particularly commodities known for volatility. Whether this continues or pauses, the key takeaway is consistency. Sustained directional movement often reflects broader participation rather than short-term speculation alone.
Silver Trad reports, breaking, top PM dealer JM Bullion sold out of all kilo silver bars. As silver closes on $70 per ounce tonight, it appears the retail physical silver shortage has now begun. This comment brings retail availability into the discussion. Retail shortages don't necessarily represent the entire market, but they can influence sentiment, especially when they occur alongside rising prices. Historically, these moments tend to amplify attention rather than define long-term outcomes on their own. Hansa Cerny comments, silver just printed a new record on COMEX. No blow-off, no panic wick, just steady acceptance above 69. This isn't a spike, it's a repricing. When records come quietly, they're rarely the last. This perspective emphasizes how price is behaving rather than where it is. Quiet acceptance, if it persists, often signals that market participants are adjusting expectations gradually, instead of reacting emotionally. Whether that continues remains uncertain, but the structure itself is what stands out here. Ottavio Costa adds, another remarkable move in silver. Some may argue it's overextended, but I see it very differently. Silver is finally responding to long-ignored structural pressures that are now coming into focus. In a highly indebted world where financial repression is becoming inevitable, calling a top in a supply-constrained monetary metal strikes me as a dangerous assumption. Game on! This view places silver within a broader macroeconomic narrative. Rather than focusing on short-term price behavior, it frames the move as a response to long-term conditions. Whether one agrees or not, it reflects how silver is increasingly being discussed in macro rather than purely technical terms.
North Star cautions, silver, be mentally prepared for a large correction, but know this, we have barely even begun this bull era. This introduces balance into the conversation. Acknowledging potential corrections while maintaining a broader trend perspective is common among seasoned market observers. Volatility is often a feature of extended moves, not a contradiction to them. Peter Spina shares, silver will go through some more volatility, swings that will throw more off the bull run. Not sure where or when, but I know the following markets below have huge influence at the moment. One with supply squeeze issue and the other taking on major deliveries. London, U.S. trading hours will be very interesting over the coming days, and we are entering a major holiday week/period. Wild timing for a wild physical silver squeeze and gold breakout move. This highlights timing and market mechanics rather than direction. Holiday liquidity, delivery schedules, and geographic trading hours often amplify price movement, sometimes in unpredictable ways. The emphasis here is uncertainty, not certainty.
Taken together, these comments show how quickly the conversation around silver has evolved. What stands out is not a single headline or price level, but the breadth of perspectives now engaging with the market. From futures structure and retail availability to macroeconomic framing and relative value comparisons. Importantly, there is no single narrative dominating the discussion. Some observers emphasize momentum and structural pressures, others highlight volatility risks and potential corrections, and many focus on how unusually orderly the price behavior has been during recent record prints. That diversity of viewpoints suggests a market still in the process of being interpreted rather than one driven by consensus. Whether this period ultimately marks a pause, a continuation, or a transition will depend on how participants respond to liquidity conditions, positioning, and broader financial dynamics. For now, what's clear is that silver has moved firmly back into active discussion across multiple segments of the market, shifting from a historically quiet asset into one demanding closer attention from analysts and observers alike.
Closing disclaimer. This commentary is provided for informational and educational purposes only and reflects market opinions and publicly shared commentary at the time of recording. It does not constitute financial advice, investment recommendations, or predictions of future price movements. All markets involve risk, and past or current market behavior does not guarantee future outcomes. Always consider multiple perspectives and consult qualified professionals when evaluating financial decisions.